Hey, what's going on, guys? Broke investor, aka retire on dividends here, back to make another video. Today's video, I will be talking about another covered call ETF. This one is called KLIP. This is not a yield max fund. This is called a Crane shares fund, as you can see on the top. And this is a China internet covered call strategy ETF, which makes it much different. But why are we talking about it today? Well, this may be of interest to a lot of people because this one pays 50% dividend yield annually. I know it's not Tesla, but no one is Tesla. No one can pay 75%. Well, maybe someone can down the road, but as of right now, no one can match it. KLIP comes close at 50%. So let's talk about what KLIP is and if it's worth your money. So KLIP, like I said, it's a China internet covered call ETF. So that alone makes it a little more diversified for you, because when you invest in the YLDs or you invest in the yield maxes, these are all companies in the S&P 500 typically, or the NASDAQs, etc. But none of them are touching China. I mean, you may or may not want to invest in China, but when it comes to China tech, I'm sure it's just as volatile as some of the tech giants that we deal with. So that may be of interest for you when it comes to covered call strategies, because more volatility equals more premium, which equals more money for you. On top of that, again, you're investing, this is more of an international strategy. So anyway, they sell covered calls on an ETF called KWEB. So as you can see here, KWEB, KWEB, is an ETF, which I'll click if it opens. I think I have it open on another screen. So yeah, this is KWEB. This is just their, their facts. But what we care about, like, what are their top 10 holdings? What are you really investing in? So these are, I guess, the top 10 China tech giants. Some of you, may know some of them: Tencent, Alibaba, obviously, and some of the others. I mean, Trip.com is on there. That's a surprise, but I see Alibaba and I'm like, okay, I feel a little safe that this is the allocation. 8.91% is Alibaba. So again, KWEB is investing in 32 different China tech companies. So you're not reliant on one company like you are with the yield max funds. You're reliant on 32 different ones based on the allocation. But anyway, so what else do you care about with KLIP? So as you can see, the current yield is 52%. They pay out monthly. So that alone, if it stays like this, you can get your money back in 2 years. So that, I mean, to me, that sounds great. I don't know about you guys, but when I invest in these, the idea is I'm going to take that money to buy more so long-term shares. I mean, I may or may not buy more KLIPs, more Teslas, depending on the price that they're currently at, depending on the discount. But if they're, if I'm at the average, or they're costing more than my average possibly, then I may just buy the long-term dividend stocks. Because obviously you don't want to throw all your money into these covered call ETFs, because, it could go bad. So, the underlying stocks could tank, which means your capital could tank. And you don't need that for your nest egg. You want to retire happily. You want to be able to sleep at night. Some other things: KLIP, their expense is 0.95%, comparable with Tesla, and the yield maxes is 0.99%. Okay, I'm willing to pay you 1%. If you give me 50% yield, no problem for me there. This just goes over a few things. Their NAV is at 1884. The market price is 1878, so a slight discount as of right now. Performance history, again, this is a pretty new fund. So it's, as you can see, the payouts from here started at 56 cents, probably it's like mid-month. And then it went up to $1.16, and then it went down to $1.09, and then it went down again to $1.03. and then it went down to 86 cents, down again 83 cents, and then it was 83 cents again in July. So it's on the downward, which means you may be getting a discount on the price, honestly. So, now could be a good time to jump in. But, that's up to you to decide. So even at this price, we're still averaging a 50% dividend yield annually, which is pretty good. Hopefully that stays pretty solid. This is their website. They just mentioned a few things of the size of it, the growth of 10,000. This is the top 10 holdings, which if you're familiar with Tesla, it's basically, covered calls, right? Covered calls on KWeb, expiration dates, things like that, if you care. Obviously some fund documents if you wanted to go through it. But one thing I'll pull up, I guess, is the fact sheet so you guys can see. All right, here we go. So again, fact sheets are the best, by the way. They get to the point. So again, here's the distributions. As you can see, we are on the downward, but we're still at a 50% yield. It goes over the top 10 holdings, which is obviously just the covered calls. And it's on the New York Stock Exchange. And, that's pretty much it. Not much going on there. So one second here. If we go back to the website, something interesting here. When I pull up the presentation for KLIP, I'm skimming through, I'm looking around, I'm trying to, get more detail, right? See what they're all about. And then sure enough, you'll get a pop-up to ask for your information. This I'm not familiar with when I look at, presentations on, here it is. See, please register to continue reading. So they want you to register in order to read their presentation, which I found a little unusual, and I did not register yet, so I did not get to go through their whole presentation, but I just thought that was kind of interesting. But anyway, KLIP, again, it's a covered call ETF based on China tech companies. I mean, that's the gist of it. So if you're okay with investing, having some investment with China, obviously you want them to be on the upward if you're investing in this, or stay flat, then you may be okay with investing in KLIP because, you get 50% a year annually or more. Could go up, could go down, of course. But anyway, that's all I got. Do I invest in KLIP? Actually, I will be. I was, and I sold for all Tesla, but I'm changing my strategy today because right now I invest in my Roth account, like companies, covered call ETFs like Devo, the YLDs, JEPI. But honestly, their yield is, 10%, 11%. Devo's 4%. Like, what am I doing? Covered call ETFs are, they're risky, right? So why not take my money, spread it across the yield max funds and a little KLIP? So that's what I'm going to do today. And I'll post about that on my Instagram if you guys want to check me out. My name there is it's actually, I changed it there as well. It's Retire on Dividends. You could find me there. Same icon and everything. But I post all my my day-to-day, I'm not going to say trading, but long-term investment strategies, buys and sells, etc. So that's part of what I'm doing today. So hopefully I can buy and hold KLIP forever, and they'll continue to pay out this massive dividend. China or not, don't care. Just pay me that dividend. Anyway, if you guys enjoyed this video, please click like, leave a comment, subscribe, or don't. Do whatever you want. I'm not a financial advisor. I'm a broke investor, again, making content on how I'm going to retire on dividends. And I will retire on dividends at some point. All right. If you made it this far, I appreciate it. And I will see you at the next video. Later.